Very good morning, students. I am here again, your Sachin sir, for taking as the accounting class regarding the next topic. In the previous video, we have just discussed about the type of revenue expenditure. Okay, what were the types of revenue expenditure? Two types. That is direct expenses and indirect expenses. So, going for a short revision, direct expenses were the expenses that are made in the factories or production line. And what are the indirect expenses? Indirect expenses were those expenses that are made for administrative purpose or other than line of production. Then here comes the another important topic that was not completed in the functions of accounting, that was interpretation process. So recording, classifying, summarizing were done and interpretation process was half completed. So again in the process of interpretation, what you have to do is you have to prepare final account. That means the recorded, classified and summarized data are interpreted in such a way that you can calculate or determine the profit or loss of the business and also to disclose the financial position of the business enterprise. So the thing is, in the process of interpretation, what is the book that you prepare? That is called as final account. And final account is just a book. And final account is prepared for two objectives. What are those two objectives? Recently, just now I said, what is the two objectives? To determine or to calculate the profit or loss of the business at the end of an accounting year. And second is to disclose the financial position. I hope students will remember what does the word financial position actually means. Financial position means the gross total of the assets and liabilities that you have in your business enterprise. Or for example, if you say financial position means the situation of a business where it has liquidity or not, that means availability of cash is there or not. Then again the situation of solvency. Solvency means the situation of a business where the assets of the business are more than the liability. So what does the word financial position means? Financial position determines that you have solvency or liquidity position or not. That means whether a business is having good solvency and liquidity position or not. So basically financial position is used to interpret or to analyze the solvency and liquidity position of the business. So coming back to our point, we have to prepare final account. And under final account, having two objectives, we have to prepare some financial statements. That was written in the last video and I have also explained the meaning of financial statements. Now we will continue it. So what we are discussing today? Financial statements. So as I have explained, what does financial statements mean? Why these statements are called as financial statements? Very simple. Since these statements record the business information, business financial information, that is why these statements are called as financial statement. One more important thing I have told you, that there are two things which are having more confusions, like transactions and events. So events are non-monetary, transactions are monetary. Now again same confusion happens with the what? Statement and accounts. You know ledger accounts. So what is a statement? What is an account? I have told a statement regarding that, a quotation for that. All accounts are statements, but all statements are not accounts. What did I say? All accounts are statements, but all statements are not accounts, because statements are just anything in a written form, but accounts are made in a specified format. So any specified format having something in writing can be a statement, but every statement cannot be a ledger, because every statement do not have two sides, do not have two aspects: debit, credit, carry down, brought down, etc. So this was the quotation that we have discussed in the previous video or the previous class. Okay. So now coming back to our point, financial statements. How many types of financial statements are there? How many types of financial statements are there? Since we have two objectives, obviously we would be preparing 2 to 3 financial statements. So actually there are 3 financial statements. Let us discuss that. Financial statements are of 3 types. What are those 3 types? First is trading account. Second is profit and loss account. Third is balance sheet. Okay. Again, coming to our objectives of functions of accounting, the last function or interpretation says two objectives of business enterprise, that is to determine the profit or loss of the business and to determine the financial position of the business. So, how we can determine the profit or loss of the business? Through these two ledger accounts. How we can determine or to calculate profit or loss of the business? Using these two ledger accounts. Okay. Again, since there are two objectives, we can also prepare two statements or two accounts. See, we can merge these two accounts. When you are more familiar, acquainted with preparing these accounts, you can also merge these two accounts. The name comes it trading and profit and loss account. Means when you merge these two accounts, you can name it as trading and profit and loss account. It is possible. But if there is a problem or a discrepancy regarding preparation or merger of these two accounts, you can prepare it individually like trading account and profit and loss account. Otherwise, you can also merge it. But this cannot be mergeable. Okay, these two accounts can be merged to determine the profit and loss of the business. But this is used to disclose the financial position of the business. This is just a statement. This is not an account. I hope you remember, since these two are accounts and this is just the statement under the type of financial statement, we have discovered that quotation that all accounts are statements, but all statements are not accounts. Okay, these all they are also having some names. Since you can merge this, so you can call it as trading and profit and loss account, and it has been given a name that is called as income statement. What it is called as income statement. Again, I have told you that all accounts are statement, but all statements are not accounts. So I can name it as a statement. There is no issue of that. Then balance sheet is called as a position statement. Okay. Why it is called as a position statement? Obviously because it determines the financial position of the business. So these two are the other synonymous names of these ledger accounts or this statement. What? Trading and profit and loss account combinedly or when you merge it are called as income statement. Balance sheet is also called as position statement. These are the most important while you are appearing for objective questions on any entrance exams like CA, CMA, whatever. Okay, so these are very key points you should remember. Now we will discuss these three in brief. First we will discuss about trading account. Students, if you remember, I have talked about that we should take example of medium scale and large scale business enterprise to have a proper distinction and proper differentiation and proper discussion between the objectives of business, the functions of accounting or whatever. So what we have taken as example like medium scale or large scale business. Why? To identify the different type of expenses or to categorize the revenue expenditure. So we have taken an example of a manufacturing concern. Okay, manufacturing concern that also has a office or administrative unit under it operating on a daily basis. Okay, so a manufacturing concern produces the goods, that means converts the raw material into finished product, and also it transfers to the showroom or office for where it should be processed or packaged for selling purpose. Okay, so we have taken example of a large scale business where a business unit has again two sub units, that is factory or production unit, and another is office or administrative unit. That serves as a better example to discuss these things. Okay, again, so reconciling those things, we will come into it. Trading account, as you know, it is also a ledger account having two sides. That is, left hand side is the debit side, right hand side is the credit side. Profit and loss account, again same, it is a ledger account, two sides. Left hand side is called as the debit side, right hand side is called as the credit side. So first we will discuss trading account. Since it has two sides, that is debit side and credit side, what you should write in its debit side and its credit side. So being a ledger account, it also has two sides, that is debit side and credit side. So trading account, okay, one more thing I forgot to tell you. You know that every ledger account has a classification. That is, every account should be either personal or real or nominal. Since these two are the ledger accounts, they also may be real, nominal or personal. So what is trading account? Trading account is a real account. Trading account is real account. What does real account indicate? Real account indicates some properties that may be visible or non-visible, that may be tangible or intangible. So trading account is a real account. So obviously it must be relating or indicating or representing some properties that may be long term or short term, that we will see in detail. And also we can write here some expenses that are directly related to purchases. How? Let's see. Trading account has two sides, that is debit side and this is credit side. So since it is a real account, whatever comes in you will write on the debit side, whatever goes you will write it on the credit side. But somehow various analysts and after various discussions, trading account is also called as nominal account. Okay, trading account is also called as nominal account. Why? See, there is nothing to confuse or think so much that why it is so. Let me give you an example. Take an example of bank account. I am talking about bank account. What is bank account? What kind of account it is? Real, nominal, personal. What kind of account it is? We know that bank account is a personal account. Bank account is personal account. What kind of personal account? Artificial personal account. Okay. Why? You know what artificial personal account means? Artificial means anything that is created by human. And why it is personal account? Since it is created by human and indicates some human, so it is artificial personal account. Or any commercial organizations running by a human being called as also artificial personal account, like schools, colleges, courts. Okay, lot of things are there. So bank is considered as a artificial personal account. If I write this as a SBI bank account, so it is personal account. You write SDFC bank account, again it is a personal account. But what do you do in your bank account? Why do you open a bank account? You open a bank account in a particular bank for keeping your or storing your properties, that is money. Or you can also take a locker where you can keep your valuable documents or also your gold ornaments. So basically you are having a bank account to store or to preserve or to keep your properties safe. So we can say that you store your properties safely in a bank account. So can't we name it as a also real account? Can we name it or not? So this bank account is also called as real account. What kind of real account? Tangible real account. Why? Just now I told you that since a bank is an organization, so you can tell it as an artificial personal account. But you open a bank account for the purpose of keeping your properties safe. So since your properties are called as real account, your bank account is also real account. Money comes in, you write on the debit side. Money goes out, you write on the credit side. Okay. So similarly, there are some accounts which can be both type of account that can be named too: personal or nominal, personal or real or nominal. Okay. Likewise. So trading account is also a real account and also a nominal account according to different persons and different suggestions and also different rules. So since it is the real account, debit side, we should write what we receive, and also being it is considered as a nominal account, we should write the expenses on the debit side. Okay, watch carefully. On the debit side of trading account, we should write the expenses, and on the credit side of trading account, we should write the incomes of a business enterprise. Again, profit and loss account also has two sides, that is debit side and credit side. Okay, and again, since it is a ledger account, obviously it must be also having a type of account. So what kind of type of account is profit and loss account? You can know very easily. Why? See, what is the name? Profit loss. Profit loss. So the terms like profit loss comes under which type of account? Nominal account. Because if there are expenses, if there are incomes, so you compare it, what do you get? Either profit or loss. So these two terms come under nominal account. So purely profit and loss account is only nominal account. So profit and loss account is your nominal account. So it comes very easy to know that what should be right on the debit side and also what should be right on the credit side. So what should be right on the debit side being a nominal account like profit and loss account? We should write the expenses of a business enterprise in the debit side, because according to golden rule of accounting, nominal account means debit all expense and losses, credit all income and gains. So what should be right on the debit side? All expense and losses. Expenses of the business enterprise, and on the credit side you can write the losses also. On the credit side you should write the incomes and gains also that you get from the business or any other sources, like you purchase an asset and sell it and you have some profit. So you can write on the credit side of profit and loss account. And you have a loss. Likewise you can write on the debit side of a profit and loss account. Now the question comes, if in trading account, being a real and nominal account, we write the expenses on the debit side, incomes on the credit side. Same goes with the profit and loss account also. In profit and loss account there are two sides, debit side and credit side. In debit side we write expense and losses, credit side we write income and gains. But what kind of expense you are writing in the trading account debit side, and what kind of expense you are writing on the debit side of profit and loss account? What type of incomes you are writing on the credit side of trading account, and what type of incomes you are writing on the credit side of profit and loss account? There must be some differentiation, there must be some distinction. So what is that distinction? Okay, recall what we have studied in revenue expenditure. Revenue expenditure are of two types. What are those two types? Direct expenses, indirect expenses. So tell me, what expenses comes first, or what expenses are primary in a business enterprise? Thing is, the expenses which comes first, obviously that will be written in trading account. The incomes which comes first, obviously will be written in trading account, because as you see, this is the primary or the first account prepared under financial statement or the book final account. Okay, so the first or the primary expenses and incomes are written in trading account. The second or the secondary expenses or incomes after trading account must be recorded in profit and loss account. So what kind of expenses comes first? We have two units in a business enterprise, that is factory or production unit, and second is administrative or office unit, or you can also call it as a part of showroom. So when you produce goods, then what you can sell? That means you purchase raw material, make into under processing, then you produce and then transport to office or showroom for the purpose of sale. That means the expenses or income of direct nature comes under trading account, and the expenses or incomes of indirect nature comes under profit and loss account. Okay. So can I say now that trading account records the direct expense on the debit side and profit and loss account records the indirect expense on the debit side. As we have discussed, lot of examples are there. If you want, you can watch the previous video and see there we have discussed lot of examples of direct expense and indirect expenses. So what kind of expenses do we write in trading account? That is direct expenses. And what kind of expenses that we write in the profit and loss account? That is indirect expenses or losses also you can say. Now one more thing is there. If you write direct expenses here and indirect expenses here, so what do you write under incomes? What do you write under incomes? As we have not discussed the types of income, but like or same like expenses, incomes are also of two types, that is direct income and indirect income. We will discuss more precisely. Incomes are also of two types, that is direct income that is written on the credit side of trading account, and indirect income that is written on the credit side of profit and loss account. See, very simple it is. If you take an example of incomes, incomes are of two types, that is direct or indirect. What are the two types of income? Direct or indirect? There is no need to mention so detail that they are of the same nature. Just the difference is expenses is a payment, income is a receipt. But when you talk about the direct expense and direct income, meaning is same. That means it is taking place in the factory or production unit it is taking place in the administrative or office unit. So the nature is same, but just the difference is it is a payment and it is a receipt. Okay, so we can say the direct incomes are earned in the factory or production unit, and indirect incomes are earned in the office or administrative unit. Okay, now how can we classify direct income and indirect income? That is again very easy. You know why? Because there is only one direct income existing in the business enterprise. You know there are a lot of incomes, but there is only one direct income existing in the business enterprise. That is only business sales. Okay, sales is a revenue, sales is a income, but sales is the only direct income that is existing in the business enterprise. Other than sales, every type of business income comes under of indirect nature. That means interest received, dividend received, commission received, rent received, subsidy received. All these type of incomes are of indirect nature or earned in the administrative or office unit. But only the income related to sales or the revenue earned from sales are only the direct income existing in the business enterprise. So now students, it is very easy to identify the income. Like direct expenses and indirect expenses, incomes are more easier to identify because direct income is only one, that is sales, and indirect income are all income other than sales are of indirect nature. So now you come to understand that what are direct expenses and direct income, what are indirect expenses and indirect income. You know the various examples of direct expenses. Now just I told the example of direct income is sales. You also discussed the examples of indirect expenses that are made in the administrative unit or administrative purpose. So what are the indirect income other than sales? You can take an example of any income that is not sales is called as indirect income. So clear about trading and profit and loss account? If you have any problem, you can ask me in the comment section or you can contact me through any media. So direct expenses are written in the trading account and direct incomes are written in the trading account of side, debit side and credit side. In the profit and loss account debit side, the indirect expenses losses are written, and in the credit side, the indirect incomes are written. Indirect incomes are the incomes other than sales, and sales is the only direct income that is written on the credit side of trading account. So we have not classified the income in our any videos. Just now I have made a short classification of it. That is, two types of income are there: direct and indirect. Direct income takes place in the factory unit. Indirect income takes place in the office or administrative unit. Direct income is sales, and all incomes other than sales are indirect income. So clear? Now we should go for the third statement, that is called as position statement. Okay. So after writing different type of expense and losses, what is the remaining or what is the left part in the business enterprise that you write in balance sheet or write in a statement like balance sheet? We have only two things left to write or to prepare balance sheet. That is assets and liabilities. So again, balance sheet is a statement. We are having two sides in a balance sheet. That is assets and liabilities. After writing different type of incomes and expenses in trading and profit and loss account, what is there to write or what is left to write in a business enterprise or to prepare through a statement called balance sheet? You have to show the gross total of the assets and liabilities as we have discussed in our matching concept. That the gross total of expenses are matched with the gross total of income. The gross total of assets are matched with the gross total of liabilities. That is what matching concept talks about. Now, balance sheet also has two sides. That is left hand side and right hand side. So in the left hand side, okay, you must be thinking why it is not written debit or credit side. Ledger account is having debit side and credit side on its left and right side, but a statement do not have any debit or credit aspect. So just I have written left hand side and right hand side. In the, sorry, a little mistake. In the left hand side, you write the liabilities. In the right hand side, you write the assets. Okay. So balance sheet is a position statement where you prepare two sides like a format. A middle part is there, a middle line is there, and the left hand side is written liabilities, right hand side is written assets. And what are assets and liabilities? You know very well. assets means the properties of the business that are brought into the business or acquired by the business for non-selling purpose, that are not for sale. And what are liabilities? Any amount owed by a business organization from an outsider except the owner. That is what the meaning of liability is. So there are different types of assets and liabilities that we will be preparing in balance sheet, and that we will discuss in our next video or next class. See, if trading account and profit and loss account are having expenses of different type, here balance sheet that records the detail of the assets and liabilities to judge solvency and liquidity position of the business. So it must be clear that there may not be single or two types of assets and liabilities. There are also a detailed classification of assets and liabilities which we will discuss in our next class or next video. Till then, please stay tuned and subscribe to our channel and keep encouraging us. Thank you.